Thanks for clicking! The London and St. Thomas Association of Realtors, Lstar, has released London's real estate data for the month of May, showing a market moving very, very rapidly in the favor of the homebuyer.
This is a nightmare!
Indeed, and while the data comes as the Bank of Canada at least appears to be embarking on a rate-cutting cycle, as we'll see, buyers are not responding by moving back into the market, with London seeing the lowest number of May sales except for 2020 for the past 10 years.
I can't do it.
And this lack of demand can't be attributed to affordability or higher interest rates. As we'll see today, buyers are just as able to buy a home this year as they were last year, but they're not. So what I want to do today is go over London's real estate data for the month of May, take a look at that data in London's historical context, go over affordability in London, and then discuss some implications as the spring market rolls on. As we saw on Wednesday, the Bank of Canada cut rates by 25 basis points, but what is less clear is whether or not that cut will have an impact on the London real estate market. We will continue to track London's market on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this data. Onto the data. First up, the benchmark price. The benchmark price, if you remember, that's the price of a home that represents the most popular set of features. The benchmark price was up, though minorly, in May. The benchmark price in London in April was $602,800, and that jumped about $4,000 to $607,100 in May. So the benchmark price is up about $4,000 since last month, but down about $12,000 since this point in time last year, back when the real estate industry was heralding the return of surging prices.
Can I trust you? Answer me, can I trust you?
And the average price was up as well, but again, by not very much. The average price in April was $647,666, and that jumped about $5,000 to $652,877 last month. So the average price is up about $5,000, but again, similar to the benchmark, it's down from this point in time last year. Down $12,000 since May of 2023. And we saw something similar with the median price as well. The median price, if you'll remember, that's where half as many homes sell over that price and half as many sell under. The median price in April was $615,000, and that bumped up about $5,000 to $619,950 in May. So again, similar to the average in the benchmark price, the median price up about $5,000 this month, but down about $6,000 since May of 2023. And the relative stability of prices makes sense when we look at the sales to list price ratio, which measures by how much over or under asking a home sells. So if a home is listed for $100,000 and sells for $98,000, the sales to list price ratio would be 98. London's SLPR was actually down in May. In April, the SLPR was 99.7, and that fell, though marginally, to 99.4 in May. So, on average, homes are selling for more under asking than they were in April of this year, and sharply diverging from May of last year when the SLPR was 101. And really diverging from the pandemic high of 125.6.
Because we are the best! Yeah!
And this all makes sense when we look at the months of inventory measurement, the MOI, which measures if no more homes came to the market, how long would it take for London to completely run out of homes for sale. The MOI in April was 2.6, and that jumped up to 2.9 in May. So we have the benchmark price up about $4,000, the average price up about $5,000, the median price also up about $5,000. Homes are selling for more under asking than they were in April, and we have relatively more inventory available on the market. And it's not just a lot of relative inventory for 2024. In May, London actually saw the highest level of relative inventory, the highest MOI, that it's had since 2014. And the surging inventory is of course aided by a lack of sales, which, as we discussed earlier, London had the lowest amount of sales for May, save COVID, that it's had for the past 10 years, down 20% just from last year alone. But the really interesting part is that lack of sales isn't being matched by an increase in inventory. If it were, we probably would see prices go down even further.
Like Sophie's Choice choices.
But looking at the new listings data, looking over the last 10 years of new listings data in May, listings are actually right about where they should be, coming in at 1,068 last month, which is below the 10-year average of 1,113, even more below the 10-year average minus the COVID years of 1,142. But with such a low amount of sales and a relatively static number of listings, the sales to new listing ratio shows a market moving very, very rapidly in the favor of the homebuyer. If we look at that sales to new listings ratio, the SNLR, which, according to the Bank of Canada, between 40 and 60 is a measure of a buyer's market, with the closer that we get to 40 indicating a market in favor of the buyer, the May SNLR came in at 46.8. That's the lowest SNLR that London has had in May, save the market correction in 2022, for the past 10 years. So, it's not that sellers aren't selling, indeed they are, though not in droves by any means. It's that buyers aren't buying, and one would expect that they would.
That's all I've been saying. I've been saying that.
That's not what I mean. Buyers should be buying, as affordability is just about where it was last year, if not exactly where it was last year. 1 year ago, bond yields were about 30 to 40 basis points lower than they were in 2024, and a decent 5-year fixed insured mortgage rate was going for 4.69, compared to 4.89 today. Let's go to the mortgage payment calculator and we'll input last year's benchmark priced home of $619,800, and we get a mortgage payment of $3,419. Now, let's use this year's benchmark price of $607,100 and that 4.89 interest rate, and we get a payment of $3,419. The exact same payment. So the affordability on that benchmark price home has not changed at all since this point in time last year. Yet, sales are down 20%. Buyers aren't buying. And as to why?
I don't fucking know.
Yeah, that's probably the real answer. Affordability hasn't changed, but buyers aren't biting. And this brings us to a recent poll from TD, which found that 76% of prospective homebuyers were concerned about prices before moving into the market, and 61% were concerned about interest rates. And that poll from TD is the only real large-scale poll that we have, besides the one I conducted on this channel, that asks Canadians about both interest rates and prices in what is keeping them out of the market. All of the other polls that we've covered at great length on this channel only ask about rates. And my guess is, as to what is actually keeping Canadians out of the market, what's keeping Londoners out of the market, is that it's a bit of both. The buyers with whom I've spoken are just fine with the interest rates, as the market is much, much easier than it was in 2020, 2021, and early 2022.
Yeah, for you.
And the would-be buyers who are not in the market, who are waiting this out, are waiting for prices to drop.
That's not possible.
My guess is, in full disclosure, this is just my gut feeling, I have absolutely zero pieces of data to back this up,
Smart.
is that buyers are going to wait until next year. They've already sat out the spring market, and they've seen headlines saying that we're going to have a big renewal problem come in 2025. Why not wait the 6 to 8 months, wait out the winter, see which way the wind blows, before jumping into the market next year? Maybe prices drop. Maybe prices drop along with interest rates. But again, that's just my guess. I have absolutely zero evidence to back that up.
We would like to offer you a job.
With that said, as the spring market rolls on, as we saw today, buyers have a lot more power for the month of May than they have in previous years. This means that, as we've talked about so many times on this channel, if you are in the market, you can and should have finance conditions. You can and should get a home inspection. If your realtor doesn't want you to have finance conditions, if your realtor doesn't want to protect your financial future, get a better realtor. With that said, whether or not London's market will remain relatively flat for the remainder of the year remains to be seen, but we'll obviously continue to track it on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.